Tesla scored an 8% increase in China-made Teslas delivered in September, but it was shooting for a little higher. In August, it produced 77,000, hoping to reach 100,000 by the end of the third quarter. Unfortunately, the Chinese economy is making its citizens reconsider buying international brands like Tesla when BYD offers the same range. Today's video will update you on Tesla's new production record in China and the challenges that might arise for Tesla stock. Let us get started. The China Passenger Car Association releases a monthly update on newly registered China-made vehicles. According to the CPCA, Tesla's Shanghai Gigafactory delivered 83,135 EVs in September alone. Shanghai was affected by the supply bottleneck that struck the electric vehicle industry. Once the factory combated that, they were faced with a forceful showdown due to renewed COVID-19 restrictions in the southwestern Asian city. The factory was shut down until the middle of April, and when they resumed, only started production in mid-June. This challenge affected Model 3 and Model Y deliveries to Tesla customers in China, Australia, and Europe. Therefore, this milestone is an impressive bounce back from all the problems that held the factory back. The 83,135 figure is an 8% climb from the August deliveries, and record high sales since the June mark of 78,906. In August, Giga Shanghai delivered 77,000 electric vehicles, exporting 42,000 of them and delivering close to 35,000 to local consumers. These exports might be unnecessary moving forward, as Tesla has built a European factory to feed its customers. Therefore, the factory might be working under capacity if more local consumers do not stock up on Tesla EVs. We will tell you more shortly. Experts say that June record was due to the insurance incentives that Tesla promised customers amid intense local competition. The insurance subsidy comes as a price cut for all electric vehicles. This time, the CPCA believes that the increased fuel prices and government subsidies on EVs have encouraged more people to buy EVs, making Tesla one of the obvious choices. In July, the Shanghai factory shut down for an upgrade that pushed its weekly capacity to around 22,000. This is a leap from its previous capacity of 17,000 as of June. However, Tesla has intended to cap its production at 93%, at least until the end of the year, according to Reuters. The sources did not explain why the plant running at total capacity needs to be capped at a point, especially in Tesla's second largest market. Since 2019, the US automaker has invested in Shanghai, Berlin, and Texas factories to feed demand. The company now has a European factory to serve its market there. In a brief statement to celebrate the third quarter success, Tesla mentioned, "The record high sales of China-made Tesla cars showed electric vehicles have been leading the mobility trend." Ultimately, Tesla reported 343,830 deliveries in the third quarter, another milestone. However, the average expected deliveries was around 350,000 to 370,000. For example, China's leading EV maker BYD's registered electric vehicles for September alone numbered 200,973, over 15% of its August sales. Thus, if it had the same global influence as Tesla, it could shoot for the moon. To make matters worse, domestic EVs cost lesser than Tesla does. We will share how the economic conditions have made people opt for more domestic EVs over Tesla soon. Of course, this news is exciting for the Tesla brand, but it does not come with its fears. At the start of the month, Tesla predicted to deliver 100,000 vehicles to Chinese users. Nonetheless, delivery has weakened since the economy started crumbling. The low demand comes at the same time that Tesla's capacity has increased concerns among investors who are not excited by the second quarter reports. Electric obtained an inside email where Tesla assured the board that it expects a very high volume of vehicles delivered. Unfortunately, that estimation did not hit the target despite the records made. This is similar to when Tesla's second quarter reported higher sales and stock profits but lost market margin. This new report raised Tesla's stock by about 2.6% toward the end of September. But as of October 12, 2022, Tesla stock stands at 216.07. To illustrate, the stock split of August 24 left each stock at $288.09. The only explanation is that Tesla is not delivering new demands. The Model 3 and Model Y that the company delivers are aged pre-orders EVs that do not add any new financial liquidity. This means that new demand is not coming in the face of inflation, competition, and international tension. As we continue to promise, your updates on everything Tesla is available here. Subscribe now and be the first to know everything. Meanwhile, Chinese EV makers like XPeng, Li Auto, NIO, and BYD matched Tesla's demand for the first time. These hybrid and EV makers are gaining substantial demand. For example, the BYD Seal sedan has the exact dimensions, storage, and range as the Model 3, but is $10,000 cheaper. Technically, aside from the name, anyone would be tempted to go for the BYD compared to the Model 3. It does not make it any easier than Chinese consumers being comfortable consuming unknown brands to the West and knockoffs. In fact, Li Auto was quoted as saying in August that despite the supply chain constraint, the underlying demand for the company's vehicles remains robust. Aside from the insurance price cut, Tesla needs to give the Chinese audience something that the domestic companies cannot offer. Otherwise, it might affect their projected deliveries for a long time. In other Tesla stock news, midterm election campaigns have led Trump to make some damning comments about EVs. If you have yet to hear it, watch our video on Trump's latest comments on EVs.